Have you ever pondered over the phrase option trading? What does it mean and how does it function in the world of finance? Well, today we're going to unravel this intriguing concept. Option trading is a fascinating realm within the financial sector. It's a derivative strategy, which means it derives its value from an underlying asset. Essentially, an options contract offers the buyer the right but not the obligation to either purchase or sell this underlying asset. The transaction can take place at a predetermined price, often referred to as the strike price, and within a specific time frame known as the expiration date. Let's delve a little deeper. There are two types of options: call and put. A call option grants the buyer the right to buy the underlying asset. This happens at the strike price and must occur on or before the expiration date. On the other hand, a put option gives the buyer the right to sell the underlying asset at the strike price, again on or before the expiration date. The strike price is a crucial element. It's the exact price at which the option holder, the buyer, can either buy or sell the underlying asset. Then comes the expiration date, the date when the option contract expires. Beyond this date, the option loses its validity. Another key term in this sphere is premium. This is the price paid by the option buyer to the seller, and it represents the cost of the option itself. Now, who's the seller in all of this? They're often referred to as the option writer. This party sells the option contract to the buyer and has the obligation to fulfill the terms of the contract if the buyer exercises the option. The underlying asset can be stocks, commodities, or currencies that the option contract is based on. Traders employ option trading for a multitude of strategies, from speculation and hedging to income generation. There's a myriad of options trading strategies, including buying call or put options, selling covered calls, or even implementing more complex strategies like straddles or iron condors. However, it must be noted that option trading, like any financial venture, carries risks. It's of paramount importance that traders understand the mechanics of options, the conditions of the market, and the potential outcomes. Thorough education or guidance from financial experts is advisable before stepping into the world of options trading. In essence, option trading is a world full of potential, offering a wide range of strategies for different financial goals. Whether it's buying call or put options, selling covered calls, or exploring more complex strategies, the opportunities are abundant. But remember, with great potential comes great responsibility. Understanding the mechanics, market conditions, and potential risks is crucial in navigating the sea of options trading. So, the next time you hear the term option trading, you'll know exactly what it entails and the significant components that make it tick. From call and put options to strike prices and premiums, this world of financial derivatives is rich, complex, and full of potential for those willing to understand and navigate its depths.
Yeah!